Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. If you have questions after the webinar today, the best way to get in touch with me is through Discord. My name at Discord is Doug P. And then in Bookmap Discord, there's an Options-Doug chat channel. That's a good place to post questions and comments or your own content. If you have something that you want to show that you're utilizing options markets, hedging flow, that's great. I welcome any content discussions related to the topics of my webinar and of this channel. And then I'm also on X, formerly known as Twitter. My name there is at Doug Pless. I do post occasionally, not nearly as much as I used to. This webinar takes so much of my time that I don't have time to create as much content as I used to. The focus of my presentation is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups, I will be talking about an underlying asset, and setups can be taken with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. So please feel free to post. And while I'm at it, let me ask, how's my audio today? It's quite hot today. I have a fan going in the background. Let me know if you can hear that, if that's causing a problem. If anyone would just let me know if you can hear that fan. So Truman says my audio is good. All right, thank you, Truman. So again, I have a fan going in the background. It's quite hot in here. If that is causing a problem, please let me know and I can turn it off. Otherwise, I'm going to leave it on. Much more comfortable here with the fan. All right, my agenda for today, I'm going to cover news items for the week, economic data, events, and earnings. Then I'll go through my positional analysis. Then I'll review some setups from this morning, and then we'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. And Edward, thank you for your confirmation as well. All right, so first of all, news items. So on Wednesday, there is some economic data coming out at the morning. 9:45 PMI data, 10 a.m. home sales, and then the big event for tomorrow is NVIDIA reports earnings, after the market closes. And the last time I checked, Spotgamma was looking for a 9.5% move, plus or minus, for NVIDIA after earnings. And then on Thursday, durable goods orders at 8:30 a.m. Eastern Time. And then the Jackson Hole Symposium of Central Bankers begins on Thursday. And then on Friday, Jerome Powell will be speaking at the symposium at 10 a.m. And then also Michigan Consumer Sentiment comes out at 10 a.m. So the week, as far as events and earnings data, earnings, and economic data really begins tomorrow with the NVIDIA earnings after the market closes. All right, let me get to my positional analysis now. So I'm going to look at levels that are in play for today. I'm going to start with the S&P 500. This is the ES futures in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. This is SPX in a 30-day 1-hour chart. And what this chart is showing is the downtrend that began a couple weeks ago, and then expiration Friday here in a negative gamma environment. Put Vanna rally began last Friday and continued yesterday, and now it looks like that may be over. So that the mechanism there was market makers' position on the gamma curve was quite negative. That means that traders were long puts, market makers were short puts, and they were short futures to hedge their delta exposure. And then as those puts expired on Friday, market makers could buy back their short futures. And that helped to fuel the rally on Friday and yesterday. And so far today, it looks like that may be over. All right, let me point out some levels on this chart. First of all, this is SPX again. The dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. And then the dashed blue lines are showing the lower and upper daily expected move. And so far, SPX is trading in between the lower and upper daily expected move. And that was plus or minus just around 29.5 points for today for the daily expected move, plus or minus 29.5 points. All right, let me excuse me. Let me point out some Spotgamma levels on this chart. These are proprietary levels from Spotgamma available to Spotgamma subscribers. First of all, here's the put wall. That's the strike with the largest net negative gamma that can be expected to act as support. That's at 4,300. And then above that is the 4,400 level. That is the absolute gamma strike. That's the strike with the largest absolute gamma. And then just above that is the volatility trigger at 4,410, and that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And then finally, the call wall has moved back down to 4,600. Excuse me. So if you recall from yesterday, that call wall moved up to 5,000. Somewhat of an anomaly, really. Well out of range. And I think what is happening here after expiration, it takes several days, maybe up to a week, for open interest to build at new strikes, and the new levels for the next expiration to start to fill in. So the levels will move around a little bit this week until they settle in to certain levels. All right, so those are the expected moves, daily and weekly expected moves. SPX trading within both the daily and weekly expected moves, and then also the Spotgamma key daily levels, 4,300 being the potential floor for price, and 4,600 the call wall being the potential ceiling, and 4,400 again being a very important level today. And Spotgamma was actually looking for mean reversion around that level, around 4,400, and that was a very good play today. All right, let's take a look at one other chart, another SPX chart before we get to Bookmap, just to take a look at the levels in play for today. So this is SPX. Let me just zoom in for today. So SPX gapped up, and here's the 4,400 level. And initially in the morning there was some mean reversion around that level, now as acting as resistance. Here's the volatility trigger, acted as resistance, and just a very nice steady downtrend continues in the S&P 500. All right, here's Bookmap, and I have SPX levels shown on my cloud notes as well as other levels. So there's the upper daily expected move, and that purple line is the upper weekly expected move. That label is obscured by the upper daily expected move, but that is the upper daily and weekly expected move, just right around the same level. Let me just check on that. And this is for ES, not SPX. So a little bit different between ES and SPX. And note that, again, those levels acted as resistance this morning, and price reversed lower at that level. And that's also SPY 442 level there, right at around 8:30 a.m. Eastern Time, and then continues the move lower. Let me point out some other levels on this chart. This is the SPY 441 call wall, and that level did shift lower as well, from 460 yesterday to 441 today. So a pretty significant shift lower for both the SPX call wall and the SPY call wall. SPX from 5,000 to 4,600, and SPY from 460 down to 441. So there's the SPY call wall. Initially, price was trading above that level, and then right at the cash open moved down below the call wall. And then here is this is the SPX 4410 level. That was noted as resistance in the Spotgamma AM Founders Note. Acted as resistance as price continued moving on this downtrend. Here's the SPY 440 absolute gamma strike. And then here's the target for the morning, the SPX 4400 absolute gamma strike. And note the point of control here. It's this purple line stepping down to where it is right now, just below the 4,400 level. So that's the volume point of control. All right, then The next gamma level in play here is the SPY 437 volatility trigger. And note that level did move lower from yesterday, from 443 to 437. Excuse me. So the S&P 500 is trading below the SPX volatility trigger and working its way potentially toward the SPY 437 volatility trigger. And we'll talk about setups in a few minutes. So that's the S&P 500 levels in play. I've talked about the call wall shifting lower, and for SPY the volatility trigger shifted lower. For SPX the volatility trigger actually shifted slightly higher from 4400 to 4410. So net slightly bearish given the shifts lower in the call walls for SPX and particularly SPY. And again, we'll talk about setups in a few minutes. All right, let's take a look at NASDAQ now. So here are the NQ futures in Bookmap. Let's take a quick look at QQQ chart just to see the levels in play. So for QQQ, the volatility trigger did shift lower from 367 to 363, and that looks like that level is acting as support. And earlier in the day, there was a lot of concentration price oscillating around this 365 level, which is a large gamma 2 level. Let's take a look at NDX now. So here is NDX 15,000, very important level today. Resistance there set up multiple shorts today in NASDAQ, whatever you wanted to trade, NQ futures or QQQ, shares or puts. This 15,000 level, key level, again, multiple short setups from that level. All right, let's go back to Bookmap, take a look at NQ futures. Again, I have my cloud notes. I'm showing QQQ levels, the 367 acting as resistance before the cash open. Here's the upper daily expected move, acting as resistance at the cash open. There's the 15,000 level. That label is obscured when one label is close to another level. Sometimes the one of the labels is not displayed, but that is the 15,000 level, NDX 15,000. And note there is a difference in points between NQ and NDX, and it's around 52, 53, 54 today. I'm using 53, I believe, 52, 53. There's the 365 level just above the upper weekly expected move, and note the oscillation around that level. And now NQ is trading down to the QQQ 363 volatility trigger. All right, shifts in levels for NASDAQ. The NDX levels, there were no shifts in levels. All remain the same, unchanged from yesterday. And then again, the QQQ, the only shift lower in levels was the volatility trigger, moving down from 367 to 363. And again, we'll talk about setups in just a few minutes. So let's take a look at a couple of other pieces of information that I look at to wrap up my positional analysis. I like to look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for SPX, SPY, NDX, and QQQ. I really don't look at NDX. That number is not significant compared to the other numbers. So note, all still negative, and SPY still pretty extremely negative. But on Friday, for SPY, that was 2.7 billion negative. So it has become less negative, but still negative for SPY. And on Friday, gamma notional for SPX was about minus 1,300, so that has dropped in half, or become less negative in half for SPX. And then also negative for QQQ. So these numbers became, compared to the last couple of days, Friday, Monday, becoming less negative, but still very negative. So this means that market makers, that traders at the beginning of the day, their position, they were long puts, market makers are short puts, and they have to sell futures as price drops and implied volatility increases to hedge their delta exposure. Then on the other hand, if price increases and implied volatility drops, they can buy back their short futures. And that is typical of a negative gamma environment. Let's just take a quick look at an illustration of that. So first of all, let's go to the Vanna model, then I want to take a look at something else on this chart. So this is SPX, and we're going to illustrate how this works. What I was just talking about, this chart is showing market makers delta notional. This is their delta exposure and how that changes with the price. There are two curves on this chart. The first, the light gray curve, shows how market makers delta notional changes with changes in price only. And then the purple curve is showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. Let's see where SPX is trading right now. So I've got SPX at around 43.86. So right around here, 43.85. So what this is showing is if price increases, implied volatility drops, market makers can buy back short futures. So that is what was happening Friday and Monday. After that reversal higher on Monday. And then on the other hand, if implied volatility increases and price drops, market makers have to sell futures to hedge their delta exposure. So this is typical in a negative gamma environment. Market makers trading with price to hedge their delta exposure. Remember, they always want to remain delta neutral. All right, just to point out one other thing. This is the absolute gamma for SPX, and this is the 4,400 level. Orange bar showing positive gamma or call gamma. Blue bar showing negative gamma or put gamma. And that is the 4,400 strike, the strike with the largest absolute negative and positive gamma. And again, spike gamma is looking for mean reversion around that level today. And that actually into the Jackson Hole Symposium on Friday. All right, so that is the information that I typically look at for my to develop a thesis for the day. So my thesis really, first of all, looking for higher volatility based on the negative gamma position, and then based on the shifts in levels, I was looking for particularly the call walls and the SPX and SPY, somewhat of a bearish thesis, and then really watching out for a continuation of put Vanna rally to see whether that played out or not. So that was just watching price action and VIX. All right, let's take a look at some setups now. I'm going to start with the S&P 500. And this is the hero signal. This chart is showing price with a white line for SPX and the hero signal, hedging impact real-time options, for a combined signal for SPX, SPY, XSP, and ES futures. And to be honest, this signal was not much of a help today. Much better clues from just reading order flow and watching reactions at the levels that I showed on my chart. We can zoom in and take a look at this chart. So this is showing the cash open here, right at 9:30 a.m. Eastern Time. Let's separate out puts and calls. So today traders are buying calls. That's shown by the rising orange line and the positive notional value. They're also buying puts. That's shown by the falling blue line and the negative notional value there. And so far it looks like the notional value for calls is higher than puts. Call buyers a little bit more aggressive today. But overall, maybe the primary clue is the total notional value is pretty low today at 1 billion. You know, sometimes this can be 2, 3, 4, 5, 6 billion. So overall, somewhat of a neutral hedging flow here in hero for the S&P 500, but not providing, at least for me, very good signals, since the S&P 500 is trading down for the day and this is positive. All right, so let's go take a look at Bookmap. Again, I found much better clues just from reading order flow and watching reactions at levels. All right, so first of all, I talked about the upper daily and weekly expected moves, levels acting as resistance. They did their job. Note the bearish order flow coming in. This is right around 8:30 a.m. Eastern Time before the cash open. Just the size of the volume dots. So you can see the aggressive sellers come in here, shown by the magenta volume dots. The volume dots are showing market buy minus sell orders. And then price just continues down this downtrend, moves below the 441 call wall, then a pullback to the 4410 level, moves lower, price continues, now moves below VWAP, continues this downtrend, continues on this downtrend. So let's take a closer look at order flow. And note for today, whoops, wrong tool. First of all, iceberg orders negative. Large traders selling this move down with iceberg orders they use to hide their size. Also stops, sell stops, helping to fuel the move lower. So iceberg orders shown on the subchart with this light blue line. Note the large iceberg orders coming in right around 11:35, 11:30, 11:45. Note the steady downtrend in the yellow line showing stop orders, sell stop orders, helping to fuel the move lower. And cumulative volume delta is positive for the day, but it looks like to me iceberg orders and stop orders are what is really driving price lower. And one thing that I try to do every day is to figure out what is the key driver of price. Is it the options market? Is it large traders with iceberg orders, smaller traders with stop orders, aggressive buyers, aggressive sellers? And once I can figure that out, then I try and trade in that direction. All right, so that's the S&P 500. Definitely bearish today. And the keys to watch, just watch the downtrend. Price made a very organized move lower, pullbacks to this downtrend line. Also watch the levels, how price reacts at the levels that you expect to act as support and resistance, and then finally watching order flow. And one thing that I found is watching stop orders. This yellow line is often, almost always, a very good directional indicator. So during the day, stop orders are almost always a key driver of price. And again, the operating in the morning, the thesis was mean reversion to the 4,400 level. So there's the 4,400 level, and really this reversal started just around after 8:30 a.m. Eastern time, just a very steady downtrend down to the 4,400 level, and now moving lower. All right, Handles asks, could you quickly go over the SPX downside level for today? I'm not quite sure what you mean. Are you talking about the lower daily expected move? If you are, okay. I posted that above in Discord. So today that was at 43.70 for SPX. Let's just take a quick look at that. So there it is for SPX, the lower daily expected move at 43.70. This is based on the options market. I usually I get that when the market closes the previous day. So I got that number. I took the close from yesterday and then took the expected move at the close yesterday for today and added that and subtracted it from the closing price to get that expected move for today. And that's available in any platform that has an options chain. That should be available. All right, so it looks like the SPY 438 level and the ES 4400 level, around that level, may be acting as support. And a lot of buyers coming in. Note the heat map that shows the history of the order book. A lot of limit buy orders coming in there from 93 to 95. All right, so that's the S&P 500. Let's take a look at NASDAQ. So again, in the morning, the QQQ 367 level, as well as the upper daily expected move acting as resistance. Great setups here with the NDX 15,000 level acting as resistance, multiple short setups. Let me just make those volume dots just a little bit smaller. And just like the S&P 500, sell stop orders shown by the falling yellow line, helping to fuel the move lower. Unlike the S&P 500, iceberg orders, large traders are buying this move down. And cumulative volume delta has shifted lower from about 11 a.m. All right, let's see what options traders are doing in NASDAQ. So not much of a clue here in the S&P 500. Maybe there will be in NASDAQ. And yeah, more of a clue, more of a confirmation here. So this is a combined signal for NDX and QQQ. I'm going to zoom in. So I'm going to mark this is price for NDX. Let me mark this 15,000 level. And remember, I talked about the 3 short setups. Here, here, and here. And these were really confirmed by options trades. So there was not really much of a lead indicator that is often the case with either the NASDAQ or the S&P 500, but definitely a confirmation of a short. So that was those were the setups, reversal shorts at NDX 15,000. Let's go back and take a look at Bookmap. Take a closer look at that. So order flow, not necessarily an easy read like some days. No clear shift from aggressive buyers to aggressive sellers, but you can see the buyer exhaustion at that level. And after seeing the first reversal at that level, then this kind of double check, definitely buyer exhaustion here. You know, these subsequent reads at this level become more clear. And at the same time, you know that, at least for here, sell stop orders definitely fueling the move lower, as well as large traders with iceberg orders selling. All right, so that is the S&P 500, NASDAQ. Hero, a little bit easier read for NASDAQ than the S&P 500. All All right, let's take a look at some stocks. I'm going to start with AMD, and then we'll get to the big driver for today. So first of all, AMD. Let's go take a look at Hero. See what options traders were doing for AMD. All right, so I'm going to separate out puts and calls. So what this chart is showing is that put buyers were really helping to drive price lower. That's shown by the falling blue line, negative notional value here. Note that 106 is the hedge wall, and that was the target for the first move lower, and now that appears to be acting as resistance. We'll take a look at Bookmap in just a moment. So we know that traders were buying puts, market makers sell the puts. When they sell puts, they have to sell futures to hedge their delta exposure. They always want to remain delta neutral. All right, let's go take a look at Bookmap. Looking at AMD. Nice downtrend. There's the 106 hedge wall, acts as support, then resistance, and price trades on down to the high liquidity at the 105 level, shown here. All right, here's NVIDIA, the next stock I want to take a look at. And the call buyers have left the building. They were in there yesterday. I think there was an upgrade to NVIDIA yesterday, and the call buyers were quite aggressive, and that is, let's see if that was the case today. So here's NVIDIA. Separate out puts and calls. So one thing to point out is, first of all, at this point in the day, put buyers slightly more aggressive than call buyers. Let's just zoom in a little bit. So up until about 12:30, notional value for puts ran around 284 million negative versus 145 million positive for call buyers. So put buyers about twice the notional value versus calls. Put buyers definitely in charge. And again, when traders buy puts, market makers sell the puts, and they have to sell stock to hedge their delta exposure. Let's go take a look at Bookmap. NVIDIA up until about 12:30, definitely moving down toward the liquidity at the big zeros and the fives levels. Looks like finally maybe found a bottom around 455, 454. Note aggressive sellers in here, shown by the falling cumulative volume delta, and you can just see all the magenta volume dots. Again, showing buy minus sell. When the dot is magenta, that means that aggressive sellers, there are more sellers than buyers. So call buyers left the building, put buyers are now in charge today, moving NVIDIA lower. as well as aggressive sellers, shown by the falling cumulative volume delta and all the pink or magenta volume dots. Let's go back and take a look at Hero. And I'm going to, let's zoom out and look at the entire day. So notice that price levels off as call buyers start to come in, and the orange line goes from flat to starts to rise, and then price levels off. And also the put line really kind of slows down. So put buyers somewhat take their foot off the gas, and then call buyers start buying again, and price levels off. So that's NVIDIA. Quite a contrast from yesterday. And one other I wanted to take a look at, Google. Let's take a look at Google. And in the morning, Google was definitely bucking the trend. Note the 130 call wall. And let's just see what happens at the call wall. So when price gets up to this level, the hero signal levels off and starts to move lower. So when price reaches the call wall, the options traders take their foot off the gas, and price starts to reverse lower. And then right around 1 o'clock, options traders started taking negative delta positions, and Google is now moving lower. Let's go take a look at Bookmap. So here's the 130 call wall. So aggressive, so traders were taking positive delta positions during the morning, buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. Options traders then take their foot off the gas at the 130 call wall, did its job acting as resistance, and then they start taking negative delta positions, and now price is moving lower. So one thing to notice here is the stocks are often a much easier read than the S&P 500 and NASDAQ. The understanding what is driving price is often much simpler in stocks, and it's often the options market, especially for stock like NVIDIA. All right, so those stocks that I wanted to take a look at. Let's just take a quick look at Tesla. I found Tesla, on the other hand, to be a little bit difficult to read recently. Let's just take a look at order flow alone. Actually, a order flow, pretty easy read. Aggressive sellers in here. Falling cumulative volume delta. Pretty deep pullbacks to the VWAP, shown by this light blue line. And you can just see the bearish order flow with the magenta volume dots. All right, so Truman asked, how do you identify aggressive buyers and sellers when I make my thesis? So the aggressive buyers and sellers, that's part of the execution process. So I see that after the market opens, and I identify aggressive buyers and sellers with the volume dots, the color of the volume dots, as well as CVD. cumulative volume delta. So let's just take a look at Hero for Tesla. All right, so we've seen for AMD, NVIDIA, and Google, we pretty clearly identified the options trades that were helping to drive price, and that's a very easy to understand mechanism. Traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure, or when traders are buying puts, market makers sell the puts and they have to sell stock to hedge their delta exposure. And then we can take a look at Bookmap and just look at the volume dots and cumulative volume delta to see what aggressive buyers and sellers are doing. Let's take a look at Tesla. And remember, yesterday Tesla was Tesla and NVIDIA were really driving the market higher. Those stocks were up pretty substantially yesterday. And not a clear read, at least for me, for Tesla today, as far as options trades go. Really, after about 10:30, there was a pretty clear divergence in options trades and price. Up until then, it was pretty clear. Very strong correlation between options trades and price action. The stock like Tesla and NVIDIA, market makers, I think, hedge pretty quickly. Let's go back to Bookmap. So the way I see this is that aggressive sellers, shown by the falling cumulative volume delta, also all the magenta volume dots, are driving price lower. And Truman says sweeps and market orders are aggressive, but I think that Bookmap just looks at limit orders. Bookmap is looking at market orders with the volume dots. That's what the volume dots are showing. Market buy minus market sell. Green dot means there are more buyers than sellers. Magenta dot, and I have adjusted the default color to magenta to stand out on the screen, showing more sellers than buyers. And so that is aggressive buyers and sellers. And I'll get to the sweeps and absorption in just a minute. All right, so then also, so that's the market buy orders and sell orders. And then Bookmap is also showing the limit orders. That's shown in the COB, current order book. These are all limit buy and sell orders. Above, they are limit sell orders. Above the current price, they're market buy, their limit buy orders. And then the heat map is showing a history of those limit orders. So there, that is showing a history of the limit buy orders at 2:30 that came in just a few seconds after the cash opened at 9:30. And that is pretty typical of a stock that traders will come in at the cash open. They will put their limit orders in, and they will just sit there and wait until they get filled. And these large limit orders often act as a magnet for price. All right, let's talk about absorption and sweeps now. And there are indicators for sweeps and absorption. Absorption is the passive orders, the limit orders. and I show those with pink or magenta and blue, light blue. So this is showing buy absorption at that level. And then the red, and also these small red dots, a little bit easier to see here, are sweeps. And those are aggressive orders. And you can take a look at the Bookmap knowledge place to get a more clear definition of exactly what Bookmap is looking for. But this, again, blue number, absorption, buy absorption, and then the red number, those are sell sweeps, aggressive sell orders, shown by the small green dots and the red number. So all that's shown on this chart is multiple sell sweeps and some absorption with the blue, light blue. So absorption, buy and sell, those are limit orders, passive, and then aggressive orders are shown with the sweeps. And so far there are no buy sweeps on this chart, only sell sweeps. So that could be another clue looking for a move lower. All right, let's take a look at the S&P 500 and NASDAQ. I've just got a couple minutes left. And so far the downtrend continues. It looks like price may have found support for the day at around the 438, 4400 level. This red number is ES 4400. And note all the limit buy orders in at 93 to 95. And looks like some traders were front running that. Let's see what options traders are doing. Let's go back to S&P 500. So it looks like these traders that have been taking positive delta positions since about 1 o'clock may get their way. All right, so Slotazari asks, when I looked at NVIDIA earlier, you said put buyers were in control. If I wanted to sell premium, would you sell calls on NVIDIA? Never. That's something that I would just not do. I think that is not a good idea. I would buy a put spread or sell a call spread if I wanted to, or just ideally buy a put. I think would be a much better trade for NVIDIA than selling calls. So I would, again, NVIDIA is just way too volatile, and with the earnings coming up, I would not sell a call on NVIDIA, especially short term. Now, if I were looking at longer term position and I wanted to get long NVIDIA, I would consider selling a put. So let's just take a look at NVIDIA. Let's take a look at, this is Friday's expiration. So we know that NVIDIA reports earnings on Wednesday. and then this is the Friday expiration, so this is after earnings. And certainly this is tempting to come in here and sell let's say a 30 delta put. Again, I would never sell a call in NVIDIA, just too much risk. When I sell premium, I typically sell premium in the S&P 500. I think that that's a much safer, more steady income approach to selling premium. But anyway, I mean, this is tempting. Sell this 430 put for 1270, 1265. If you're right, you make $1,200. But I would only do that if I wanted to get long, and I would probably, if I wanted to sell a put in NVIDIA, I would go further out in time. Maybe go all the way to October expiration and sell something like around the 400. But NVIDIA moves. Let me just check something here. Right now I have the ATR for NVIDIA at over 18. So NVIDIA moves up or down according to this over 18 points a day. So NVIDIA moves quite a bit. So I would I would proceed with caution. And one thing that Spotgamma has pointed out is the NVIDIA expected move for Friday plus or minus 52 points. So this is for Friday. So that is a very big move. So proceed with caution. Let me just see if I can find one thing real quick. And then we'll wrap it up. Go to so one thing that Spotgamma was reporting out this morning. So this is not that helpful for NVIDIA, of course. NVIDIA reporting earnings. This is IV rank, very high. For Tesla, on the other hand, very low. So, if you wanted to sell an iron condor in NVIDIA, but I would stay defined risk in NVIDIA. And then with this low IV rank, for example, in Tesla, this really favors more of buying options than selling. All right, so one last question. Sorry, I'm not sure how to pronounce your name at YouTube. I apologize. Mafuz Allahi, which broker do you use to place trades? I trade stocks and options on Thinkorswim, and options also on Tasty Trade, and then futures with Tradeovate. So those are the brokers that I use. All right, my time is up. Let's just take one last look at the S&P 500, and so looks like options traders may be getting their way now. 438, 4400 acting as support. Let's take a look at NASDAQ. Also moving higher. The 363 volatility trigger also may be support, and large traders coming in with iceberg orders now, starting to buy. So the 2 p.m. rally looks like may have started. All right, that's all I have. I want to thank everyone for watching. Thank you very much for your questions and comments. I love when you ask questions. I really like these interactive sessions. So I hope this was helpful. Again, thank you for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks. Bye.